All right, what's up, guys? What's up? So I wanted to because I was like looking more information on certain stocks I've had or certain stocks I recently bought, and I figured I want to record the process of it, right? The process of me. Again, I'm no one special. I'm not more intelligent than you. I'm not anything better than you. I would say the only difference between me and you is that I love stocks. I believe in stocks. I believe in investing. I have determination. I have consistency. I have drive. Okay, so that's probably the difference. The difference between like how our mindset is going at it. Where again, this is my way to gain financial freedom. So this is what I'm doing. All right. So I figured I want to cover out, let's say, how I go about a stock. Okay, how I go about learning about the stock a bit, and keep on learning about it. Right. So let's say this. I start by a lot of times. Right. Again, I'm nobody special. I don't know the stocks inside and out. I'm not here like tracking the stocks, knowing everything about it. So plus again, I'm not a particularly like a stock trader or you know um a stock guru. So that's why I said I'm not smarter than you. I'm no better than you. I just go about things in a more determinate fashion than you, right? This is my wheelhouse. Right? This is what I want to do. So, how do I go about stocks? Well, I would think usually I hear about it, right? Usually I hear, on Facebook, someone says, oh, this stock, or I see on YouTube, they talk about this stock, so on. Okay. So I hear about it. Let's give an example. This stock, RZLV. Now, again, every stock I ever say doesn't mean that you should buy it. Okay. That is what I'm doing. I'm more talking about, in general, what you can do, about going certain things. But particular stocks, please, you know, uh, understand that if you do or not. Because here's the thing. Let's say there was an example where I listened to a YouTuber, right? Says, "Oh, this stock is going up, and I'm going to make thousands, millions on it." Okay, and I was like, I look at that stock and like, okay, I'll buy it, right? I was like, you know what? I look into it. Sounds good. He did his research. I was like, okay, I'm going to put money into it. That has lost me money before, right? Plus, but it also I have gained money from it. So at the end of the day, even like if you saw my other content, my non-investment content, it's all about accountability. I don't blame nobody if I buy a stock and I lose money in it. I blame nobody but myself because we are all adults. We choose to buy we choose what to use our money for. Okay, so I want to preface that. Do not buy something because you hear someone on YouTube or Facebook or anyone on social media say, "Oh, buy this, you're gonna make millions of it." Don't do it. That's up to you. Okay. If you do it, know that you chose to do it. Okay. So let's say example for this stock, I chose to do it. So if I lose money in it, I'm not blaming nobody. That oh, you know what, this YouTuber told me to buy it. This what is it? Wall Street Bets told me to buy it, and I bought it, and I lost all my money in it. Well, that shows how stupid you are, right? That shows that you know what, you are a fool. You blaming other people's for your adult decisions, you're idiotic. I just want to preference that because I've seen it before. When people are like, "Oh, I'm gonna go YOLO. I'm gonna YOLO it. Right? I'm gonna put all my savings," and I've seen it. We'll probably do that. We'll probably do a investment losses. Okay, a reaction to it. But I've seen people go YOLO, like put all their savings into a stock, into whatever, into a bet, thinking that they're gonna 100x their savings, and then they lose all of it. So at the end of the day, no one to blame but yourself if whatever happens. Because here's the thing: you will cheer yourself for buying a stock, but you should blame yourself for losing money on the stock. Okay, I mean you will cheer yourself for making money on a stock. You should blame yourself for losing money on a stock. So I want to preference that. Okay. Back on the topic. So let's say this stock. Okay. Let's say I've heard this, I heard a YouTuber talk about this, right? Uh, RZLV. Okay. I was like, you know what? Let's say how I go about it. Again, this is how I go about it. I'm looking at it, it's like, okay. I figured it's either two ways, right? Where I'll study the stock for a little bit, or you know what? I put $100 in it. Just in case, so I know my starting point, right? So let's say I put $100 in at, let's say, $5.36. I mean $5.36, right? $5.36. So I put $100 in it just to get the feel of it, and I know my basis where I start. So it went down. It went down. Okay. Then I want to learn about it. Okay. I want to learn. I want to know if I can build a conviction, right? A conviction where, you know what? I do want to continue putting money into it. I do want to see how it goes. Okay. So resolve. I put a bit of money into it. I'm like, let me learn about it. So what do? I go to Google or I go to YouTube. First, I'll probably go to Google. I'll put in RZLV price forecast, right? So it's analysts, other really smart stock investors, analysts, right? The bankers, the stock investors. I read and what they talk about, right? So let's say Resolve, okay? I learned about it, okay? You can learn Resolve is trading in the middle of its 52-week range and above its 200-day simple moving average. Okay, it's not it's not as highs, but it's not as lows. Okay, reading all these things, just getting it, learn a little bit about what kind of company you're buying in. Resolve is a AI commerce, right? Commerce company, right? So they do AI, but for buying and selling stuff. Learn a bit about it. Its market cap. These are its ranges that it moves in, right? This is right. Again, this is CNN Business. Uh, this is like, it's a strong chance to outperform the market over the next 12 months. Okay, sounds really good, right? It sounds really good. Doesn't a lot of things that I kind of like. Okay, I know the company a little bit. I know that it's not. I'm not buying it necessarily at its all-time highs. Okay, I know that it has a. Well, I was thinking about this, right? Market cap. So it has a 1 billion market cap. 1 billion. Okay, it sounds like a lot, but it's also not that much. All right, unlike, let's say, like Nvidia, right? Nvidia is at a 4 trillion. So in my mind too, right? This is a $1 billion company, $1 billion, but it has some room. So as $1 billion, maybe you get to 2 billion, maybe you get to 5 billion. That's reasonable, right? So if I buy it, let's say at the $5, right? Or where it's at right now, $4. It's at a $1 billion market cap. So if it turns to 2 billion, that means it's doubled. It doubled its market cap. So it would probably double its price, where instead of 4, it's at 8. Right? That's the concept of you can judge the market cap, right? So I look at the market cap and think, what is it? How is it likely my money would double? And I hope when I buy something, I hope it doubles at least, right? Particularly these risky high growth companies. So I hope it doubles. So I'm thinking, you know what? It has room to double. Okay, here's a $1 billion company. It has room to go to 2 billion, go to 3 billion, maybe even more. So I could judge, like, you know what? At $4, it can get to 8, 12, whatever. So each time it, 100%, right? 1x. That's what is it? So then I read what do other people think, right? What do the big smart people think, right? They think it's going to outperform. Okay, sounds bad. It doesn't sound bad, right? It sounds pretty good. Here's the thing where it talks about its financials, so you learn about the company a little bit more. Again, it's not making money, so this is a risky company, right? You can see that it's lost money, right? Negative 500K, negative 300. Didn't show that. Negative 1 million. So it's risky, right? It's risky. So again, you gotta learn the good and the bads of the company. So forecast. I also like this, right? So forecast is saying, okay, this is what these people, right? These smart analysts, these smart financial investors, what do they believe will in about 1 year's time? 1 year's time, what do they think these will the price action will be? The price of the stock will be. So, just to give my guess, like, okay, they say in about a year be $15. Okay, you know, at best $15. At in the middle, $10. At worst, $7. Okay. So I'm judging like, you know what? There's a good chunk for the highs, right? Good chunk for the highs. So again, this is forecasting what may happen, right? How do they see the stock performing in the future? Could be, could not. Okay. Again, a lot of these are educated guesses, right? Educated guess. Because again, at the end of the day, it's the company, right? You hope the company will execute, will make profit. So just like, let's say Amazon. Well, you hope this company's making money, right? You hope Amazon is, every year it makes $1 billion in profit, whatever, how much, right? So it's making profit. You hope that it's whatever it does, right? You let's say you compare, oh my God, going to Target, all this shit is expensive. Okay, yeah, it's expensive, but you go around Target and you see, wow, the lines are always so crazy. It's got to be doing good, right? It's got to be doing well. So that's what you got to think about. I hope this company does well. I hope this company does good business. I hope this company is making money. So again, okay, now I got a good forecast. I get a good understanding of the company. So what else am I going to do? Okay, I'm going to go to YouTube. Okay, again, this is not like it was, let's say 50 years ago, right? Let's say it's not like what it was 50 years ago where our grandparents, even maybe our parents a bit, had a hard time investing. Okay. We have everything. Everything is in the power, right? In the power of our hands. Everything. And this is why there's no excuse for being broke. There's no, if you have a job, right? Right there, you already started your path. The next part is not just working hard, it's working smart. And that comes with investing. And to work smart, we have everything in our hands. I don't need to be the smartest person in the world. My phone is keep making up for me because with this, right, I'm smarter than most people in the past. I'm smarter than probably anyone in the past, right? And I'm probably smarter than someone in the 100 years ago with this. So again, this is our ability. So let's dig and dive. Now, again, I'm not trying to tell you to buy this stock. I'm saying since I'm watching this, I wanted to watch this, right? I didn't watch it yet. I'm going to do it, right? So let's watch this together.
Podcast.
Today we're looking at Resolve AI. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Okay.
Look, for a lot of investors, what really matters right now is, momentum.
Mm-hmm.
And if you look at Resolve AI, the story, the narrative, it feels overwhelmingly bullish. And this is really being driven by incredibly high investor confidence. It stems almost entirely from the recent, explosive price action.
Explosive is definitely the word. I mean, we've seen this massive surge, right? 59.1% increase over just the last 4 weeks.
Yeah.
And the stock closed recently, around 5.95 cents?
That's right.
That kind of short-term pop, it grabs everyone's attention. The high-frequency folks, but also the long-term investors, because it just screams, hey, something fundamental might have shifted here.
And that's what the analysts seem to be pointing towards.
Okay, the analysts. What are they saying?
The consensus rating right now is actually a strong buy.
Wow, strong buy. In this sector, that's pretty rare.
It is. It's a powerful signal. But here's the real kicker, the true sign of conviction, maybe.
Yeah.
Analysts didn't just, confirm the current price. They recently hiked their price target by an almost eye-watering 105.72%.
Over 100% increase.
Yep. Pushing the expectation up towards $9.71.
Okay, so that signals a deep belief then that the future value of this AI solution is way beyond where it sits today.
Exactly. It suggests they think the fundamental value far exceeds the current market price.
It almost sounds too good to be true, frankly.
Yeah.
But, okay, when you look at the chart, do the technicals back this up, this analyst optimism?
They seem to, yeah. For listeners trying to learn, the stock is currently trading consistently above both its 50-day and its 200-day moving averages.
Right, and why is that so important? Explain that a bit.
Well, that's the technical confirmation, right? It tells us this isn't just market noise or like a short squeeze.
Okay.
When a stock gets above its 50-day moving average, that confirms short-term strength. But when it stays above the 200-day average, that's confirming a more robust...
I mean, this is the thing, right? I use smarter people, right? Smarter people. I always say this. I'm a nobody, right? Average ass person, not smarter than you, not better than you, nothing. So, but what we can do is go about things smart, right? Go about things logical. I will use smarter people, right? Smarter people to figure out shit for me, to explain things to me where, you know what? I can understand that, right? I can understand that where analysts, investors are saying that, you know what? This is a big opportunity. Okay. So, okay, you know what? Sounds good. I may do it. It's like, I'm liking it more and more. And again, they say they doing these analysts, they're figuring it out for me. So, it's helpful.
Long-term upward trend.
Got it. So it suggests bigger money, institutional money maybe, is comfortable buying and holding.
Yeah.
They believe it'll keep going up.
That's the idea. It suggests they believe in sustained appreciation, not just a quick flip.
So what's the core engine here? What's driving all this faith? It can't just be happy chart lines and analyst hopes. What specific edge does Resolve AI actually have?
Yeah, it really comes down to their market positioning. They aren't just doing, general AI for everything.
Right.
They have these unique generative AI solutions specifically tailored for the retail and e-commerce sectors, which are, let's face it, highly demanding.
Okay, so niche focus. Like what exactly?
Think personalized shopping experiences, dynamic.
Now, I'm going to talk about this company, okay? My mindset, right? Again, this video is pretty much talking about my mindset when I go about stocks. I'm thinking about, okay, niche can be good and bad at the same time, right? Niche can be good and bad at the same time, where you are focused, right? You are more focused. That is not a bad thing, right? So you put all your energy into one thing, right? One skill, you master one skill. But that can also be a danger where you're so mastered, you're so niched. If the niche isn't that important or isn't that amazing, or you have so many other competitors, it gets hard. Plus, you can't expand, right, your abilities. So let's say Amazon. Well, its niche was, Amazon buying, products, right? Buying and selling, not buying, but selling products on Amazon's website. But Amazon has grown to now they are a distributor of, the cloud, or, they help companies have, I believe, the AWS. That's like their, the internet service stuff. Okay. So Amazon does a lot of different things. Plus they've gone into, streaming with their Amazon Prime stuff. Okay. So that's the thing that's why I say, like, this is still a small company. It's very niche. So it'd be great. It's nice that it's focused on one thing, but those are also something that I'm in the back of my mind. How amazing is their niche? So their niche is AI in commerce. So they help you with the checkout, they help you with shopping. And I'm like, so in my mind, this is a company that if I'm buying it, it's focused on just buying, right? Buying and selling and, helping people with buying and selling things. So consumerism. Do I think consumerism is still strong? I mean, it is strong, okay? But it's like, is it still strong? That's where it's going to. So, that's my mindset where I'm trying to think, analyze, is this a good thing?
Pricing based on real-time data, seamless customer interactions across multiple channels.
Stuff retailers really need.
Exactly. Their ability to power these dynamic connections, what they call conversational commerce, it's crucial. And it seems to be driving this huge market demand for their platform right now.
So they're seen as a leader in applying AI right where the money changes hands.
Pretty much. That's the perception, and it's a powerful one.
Okay, that paints a really compelling picture. High momentum, strong analyst backing, cutting-edge tech, carving out a niche, growth story, right? Mm-hmm. But this is where we have to pause, yeah?
Yeah.
Because the sources, they present this Staggering contradiction.
They do.
You mentioned institutional money seems comfortable, but if we flip that coin, the company's actual financial reality, it tells a, well, frankly, terrifyingly different story.
And this is the absolute crux of the investment decision. It really is. While the revenue growth looks good, I mean, it's compelling.
What was the number?
They reported a 29.46% increase in 2024, reaching $187,788 in revenue.
Okay, nearly $188,000. Growing.
Yes, but that figure is absolutely dwarfed by their spending, their expenditures. The company is incurring just massive, massive high losses right now.
And those losses are the giant red flag, aren't they? The one every potential investor has to wrestle with.
Absolutely.
We aren't talking about a small operating loss here, like a startup finding its feet.
Yeah.
Their net income, it currently sits at a staggering negative $217.53 million.
Yeah, negative $217 million.
I mean, they are burning through almost $250 million to generate less than $200,000 in reported revenue. How? How can the market justify a $1.42 billion valuation for a company with that kind of...
You see that? This is why it's important. Again, I'm not telling anyone to buy this because it's risky, really risky. These companies are my YOLO play, right? But again, I'm putting, let's say, 3,000, 4,000. It's a lot, not a little bit. Okay, I don't want to lose that money, right? So I will cry if I lost that money, but it ain't, 10,000, 20,000, or 100% of my portfolio. It's not. It's about probably 2-3%, if that. Probably 2. So risky, right? Manage your risk. Understand that, you know what? There's a chance to lose money. This is not Amazon, okay? This ain't Google. This ain't Microsoft. This ain't Apple. You could lose your money in it, okay? That's why I always say, again, this is more just about my idea when I go about buying stocks. It's not telling you what to buy, because I've always said, if you're a beginner, it's better off to buy big, strong companies. So you're not, because if you start out with risky ass companies and you lose your money, your mindset will change. Like, I don't want to do stocks anymore because when I did stocks, I lose money. That's the thing where you're not thinking correctly, because you did risky, right? It's like, oh, I don't want to gamble anymore because I lose money. Well, you were gambling. So no duh. You have a high chance of losing money. Now, it's a difference where, oh, I don't want to save my money anymore because what? You lost money because you saved? No, you don't lose money for saving. You're saving money. But you have to understand the mindset. I am gambling, right? I am gambling. So since I'm gambling, there is a chance, depending on how risky the company is, a low chance, a high chance, whatever, that I will lose money. But you got to always think, the higher the risk, the higher reward. I'm hoping for a high reward, even though I know there's a high risk. But again, this is the process of, you know what? Why I put $100 in a company, okay? If I lose $100, I lost $100. Sad, but whatever. But this is the process where I'm saying, you know what? I'm going to learn more about the company. I'm going to do my more risk reward kind of thing, right? The more I know about the company, the easier it feels, the easier it's perceived that, you know what? Maybe it's not as high as a risk that people believe, right? Because the more you know about something, the more you can figure out, what you should do, right? If you know the company inside and out, right? Like, you know what? Even though if it's losing money, I know this, I know that, I know that. So I know it won't go bankrupt, okay? Again, the way to lose your money is that company is going or heading towards bankruptcy or something like that, right?
It seems wild.
Well, that is the ultimate paradox, isn't it? Especially in growth investing, and particularly in the AI space right now.
So investors are just buying the dream, the future concept, not the current business.
Pretty much. They're buying the potential. That $217 million loss, in their eyes, maybe it's not just poor performance. Maybe it's the cost of aggressively buying market share, funding heavy R&D, building out that proprietary platform faster than anyone else can.
Scale over profit.
Exactly. Prioritizing scale and technological superiority over immediate profitability. But, and this is a huge but, that enormous burn rate creates immense liquidity risk. Huge. It raises that critical question. How long can they keep this up without running out of cash or having to dilute shareholders like crazy?
And that liquidity concern, that's exactly what brought all the market scrutiny,
right,
which really seemed to crystallize with those short seller reports.
Precisely. Yeah, you might remember that highly critical report back in September 2025. It was from Fuzzy Panda Research.
I do. They went after the accounting, didn't they? Growth claims.
They did. Directly question some of their accounting practices and those growth claims. Now, Resolve AI, they push back hard, publicly labeled the report misleading.
But the damage was done.
Well, it definitely temporarily spiked volatility and market vigilance. People started watching much more closely.
And connecting those huge losses directly to how investors felt. We saw major worries about profitability, about that long-term liquidity surface earlier, didn't we? Back in August 2025.
We did. That period was marked by a really sharp stock decline, remember, about 12.8%.
Right. So it shows just how fragile that investor trust can be when the financial numbers just don't seem to line up with the momentum story.
Exactly. And that negativity, that skepticism, it hasn't entirely vanished.
It's still lingering.
Yeah. I mean, when a company spends this aggressively on growth, its accounting practices often end up under a microscope.
Makes sense.
So there is still, lingering market chatter, whispers about potential new short seller reports, maybe even class action announcements, looking into how they book revenue or handle expenses.
So that's a risk factor. Adds friction to that upward trend we talked about.
Absolutely. It's something that has to be factored into any investment decision here. It's not smooth sailing.
Yet, back to your point about the market cap, that $1.42 billion figure, that size, it does provide some kind of counterweight to the risk, doesn't it?
It does offer some flexibility.
It suggests that institutional belief, maybe it really is long-term focused. That size gives them room to make strategic investments, provides some runway, even with that crazy burn rate.
Right. They have access to capital markets that, smaller startups just don't.
Which brings us back to their operational success then, because that has to be the justification for the massive valuation, right?
Right.
They're trying to prove the cash burn leads to real, defensible market dominance.
That's the entire narrative they need to sell.
Okay, let's tick off those wins. They recently announced they surpassed $50 billion in gross merchandise value, GMV. For the listener, GMV is basically the total value of all sales processed through their platform, hitting $50 billion. That means their AI solutions are handling real, huge volumes of commerce.
It's a massive benchmark for traction. It shows usage at scale.
Absolutely. And they're doing this through big clients, not just small shops. They reported back in August 2025, they now have over 50 major enterprise clients.
Right. These aren't just, mom and pop stores. These are large established companies integrating Resolve AI's commerce tools. That's powerful validation. Shows the tech is reliable and scalable.
But the real, perhaps game changer, was those strategic partnerships they secured in September 2025. Alliances with tech giants, Microsoft and Google.
Huge names.
Are these just like press release partnerships? Or are they deep integrations?
From what we can tell, they appear pretty deep. These alliances are critical because they basically place Resolve AI right at the heart of how enterprises are adopting AI. It means their tools get integrated into these ecosystems that, well...
And that's the thing, right? That makes me think. Again, I'm explaining my thought process. Here's a company that, yes, it's burning money, right? It's burning money. It's like using a lot of money and making very little money. But it has partnerships. Started partnerships. Microsoft, Google. Now we're thinking about, what if it has more partnerships? Amazon, Apple, right? Big companies, the leading companies in the world. If its technology is so appealing, right, to Google, to Microsoft, its technology, then its technology will most likely be appealing to other giants, other commerce giants, right? Who are other commerce giants? It is Apple, Amazon, others as well, okay? So makes you think, okay? You got to weigh the pros and cons. That's how you got to go about it. Weigh the pros and cons.
Practically every major corporation already trusts and uses.
So that creates a moat, harder for competitors to push them out.
A strong technological moat, yeah. Makes it much tougher for others to displace them.
And they weren't just signing partners, though. They went shopping in October 2025, right, to beef up the platform.
They did, an acquisition spree.
Completed the SmartPay asset acquisition for about $1.9 million plus shares. And they also bought a company called SubSquid.
Right. This tells us they're aggressively buying competence, plugging gaps. The SmartPay deal is focused squarely on payments.
Key in e-commerce.
Absolutely. In the e-commerce world, controlling that payment rail is often key to profitability and capturing valuable data. They paid a relatively small amount to instantly boost their payment infrastructure.
Okay, makes sense. And SubSquid. Sounds very technical. What does that bring to the table?
SubSquid is all about enhancing data connectivity.
Data. The fuel for AI.
Exactly. In the generative AI space, the quality of your data, how easily you can access and use it, that's everything. SubSquid's tech likely helps them connect and process diverse data sets much more efficiently.
So making their AI models smarter and faster for clients.
That's the goal. It's really a foundational technology investment designed to keep that competitive edge and intelligence sharp.
And then finally, on the structural side, we saw that major institutional shareholder transfer announced in October 2025. That feels like a move to reassure the market, maybe stabilize the share price amidst all the scrutiny.
I think it was a very deliberate move, yeah. Designed to strengthen their global institutional shareholder base.
How does that help?
Well, when large, stable investment funds are known to hold significant chunks of shares, it inherently boosts credibility. It can help manage volatility, provide better market liquidity. It's basically a strategic signal to the market saying, look, the smart money is actively involved here, trying to offset some of the fear generated by those short seller reports.
Okay, so summing up this part, we have this company fueled by like explosive momentum and real strategic operational wins. But at the same time, it's seriously hampered by these massive financial losses and persistent skepticism.
That's the tension.
So the entire investment case really rests on whether they can actually make that leap, right?
Okay.
Transition from just a cash-burning growth machine into a genuinely profitable platform.
That's the billion-dollar question, or rather the $1.4 billion question, given the market cap.
Okay, so looking ahead, what are the really high-stakes catalysts, the things coming up in the next, say, 3 months that could determine their fate?
All right, crunch time events. The immediate most critical one is the Q3 2025 earnings release. That's scheduled for January 10th, 2026.
Okay, Jan 10th. That date is everything then.
Pretty much. Expectations are incredibly high, not just for continued revenue growth, but specifically for management to address and ideally show a clear path toward mitigating those huge operating losses.
They have to deliver.
They have to deliver convincingly on their stated revenue milestones. That's needed to validate the current momentum. If they don't, well, the party could crash hard.
And beyond their own filings, there's the institutional calendar driving potential volatility too, right? You mentioned watching 2 dates.
Yes. We need to watch the institutional ETF rebalancing on October 31st, 2025, and then a major 13F filing deadline on December 2nd, 2025.
Okay, ETF rebalancing and 13F filings. What do those practically mean for the share price for someone listening?
So the
And again, see, this thing is like, it helps, like, using the resources we have. I can learn about these dates, or I knew about, okay, these are good. I didn't need to go on Google or in their, their earnings reports or whatever, right? To learn, oh, I need to pay attention to that or like whatever. I use the resources I can use, right? Make it easier for me. Here are people that are, let's say you're interns, right? Let's say you are a company. You're using interns, right? To do the digging, to do the research for you. You take all what the interns, right, use that research or did all the paperwork or all the researching. You use that to figure out, you know what? Here's even more. Summarize it for me. Make it even more easier, right? And that's the power of having, right? Of having, all these kind of medias, all these kind of things. Okay? That's the power. If you have it, you can figure shit out. And this is why I say there is no excuse. There's no excuse.
ETF rebalancing. Basically, major index funds that track specific sectors like AI or e-commerce, they'll decide whether to add Resolve AI, remove it, or change its weighting in their portfolios.
So big money flows.
Huge flows. If Resolve AI gets included or heavily weighted, massive amounts of passive capital just flood into the stock, pushing the price up.
And if they get excluded?
Significant selling pressure can hit almost immediately. It's automatic buying or selling.
Got it. And the 13F filings.
Those filings reveal what the biggest hedge funds and institutional investors, the really big players, have been doing with their shares over the last quarter.
So we see who's buying and who's selling.
Exactly. If we see large respected funds dumping their shares, it's a huge psychological blow, sends a bad signal. But if they're increasing their stake, it reinforces that bullish narrative we talked about.
So both days could cause big, unpredictable price swings.
Absolutely. Considerable volatility is almost guaranteed around those dates.
And then there's external data validation, right? Smack in the middle of all this. The Holiday Retail Trend Report release on November 15th, 2025. Why is that one critical?
Well, it gives external analysts and us a chance to see how Resolve AI's solutions actually perform during the peak retail season. Are companies really using these conversational AI tools?
So real-world proof.
Yes. If the report shows strong adoption, strong penetration, it provides independent validation that their platform is actually dominating the market like they claim. It backs up the story.
Okay. And finally, we had to touch on the rumors, right? In a stock this volatile, speculation itself can be a catalyst.
Definitely. You have to pay attention to the whispers. One major rumor floating around suggests deeper, maybe even exclusive agreements with either Google or Microsoft could be announced soon.
Taking it beyond just a standard partnership.
Yeah, maybe something more foundational, more integrated. That would be huge news.
And then there's talk about the public sector.
Right. Speculation that Resolve AI might be bidding for a large-scale government digital transformation contract, potentially in Europe.
Wow, landing a government contract like that?
Yeah.
That would lend immense credibility, wouldn't it?
Yeah.
Especially around security and scale, outside of just volatile retail.
Huge credibility boost.
Yeah.
And stability.
Plus, you mentioned the market is buzzing about more acquisitions.
Yeah, potential further fintech or data integration acquisitions as they keep building out that retail payment and data ecosystem.
So any of those rumors turning real could send the stock flying.
Could send it soaring overnight. But just as easily, if those Q3 earnings disappoint or a negative 13F filing drops, the downside risk is equally severe. It's a knife edge. So for you, the investor, here's the synthesis. Resolve AI is an investment defined by immense duality. Really is. You have this explosive growth momentum, undeniable operational progress, real analyst optimism on one side, all driven by what seems to be a best-in-class generative AI product for its niche.
Okay, the bull case.
Right. But it is equally and heavily burdened by significant market-shaking losses and this ongoing scrutiny regarding profitability and their accounting practices on the other side.
It's bear case.
Exactly. The next 3 months, maybe 6, will determine everything. It's going to be shaped entirely by how well they execute on those financial disclosures and by these crucial institutional actions. The ultimate question you, the investor, must ask yourself is this. Given that $217 million annual cash burn, are you comfortable investing purely in the concept of AI market dominance? Or do you need to wait until they actually prove they can turn that cutting-edge technology into sustainable profit?
And that is the thing, right? That is what we, and that is the point. Okay. That is the point. You have to think about, is it worth it? Is it not? Right? Should I continue to buy in, or should I never have bought, or I should don't even do it at all? Okay. Now, all these steps, you can do it before you buy, while you're buying it, or, after you bought quite a few already. Okay. Again, let's say if I had only one share of Facebook, that means nothing. Okay. But if I had 100 shares of Facebook, that's a lot, right? That means more, because that you make more. So if I have a couple share of this company, Resolve, it's nothing, right? If I make $20 on it, what does that do, right? So I want to make, let's say, 100, or let's say I want to make $10,000. I want to make $30,000. I want to make $100,000. And this is the point where you got to continue learning. This is why how I go about it, right? Like I said, how I go about it, where I'm not going all in, right? So right now, which is a lot of money, not a small amount of money, but look, this is it's only 1% of my portfolio. I put in about $8,000. That's a lot. That's a lot of money. But that is only 1% of my total portfolio. Now, having 1,400 shares, it's a lot, but in my mind, right? Think about this. Like I said, this is a $1 billion company. $1 billion. Now, let's say $17,000. If it doubles, right? 17, it'd be 14. That's not bad. But you got to also think. I'm thinking, right? I'm telling you my thought process. I want to get it, right, to even more if I believe in this company. So do I. So if I do believe in this company, I'm like, you know what? Every time it goes down, right? Every time it's like going down lower than what I bought it at, right? I try not to buy any company that is above my average cost. So this is like, if I, you average the cost of all the times you bought the stock, it averaged to $5.36. So since it's now honestly $1 under what I bought it at, if I still believe in it, right? If I really do believe in it, I'm gonna put more into it. That's my thought process. So do I still believe in it, or do I believe in it? Should I buy, or should I continue to buy? That's what you got to think about. So this is how I think when I'm buying stocks, or when I about to buy stocks. So again, I'm telling you where, it's like the thought process. It's either this is how you think about before you buy it, during buying it, or after buying it, a lot of it already, right? So, do I want to make it like 2,000 shares, 5,000 shares? Who knows? Who knows how much I believe in it? I'm just saying what you should be thinking about when you're buying stocks, or about to buy stocks. So that's the process, right? What do you guys think? Please tell me if you guys want any more kind of ideas or questions, so then I know what to make a video on. So again, this is like noob investing. You can go deeper. You can get in, even if you are the type of person to really go technical, right? You want to read their earnings report. I'm too lazy. I find I will fall asleep, right? I will get bored reading their earnings reports or knowing all this stuff. That's just me. But you could do it. But for me, I rather outsource it. I rather outsource the boring shit. Right? I rather outsource the boring shit and like have someone tell me it. Now, again, that's me. If I trust what other people are saying, that's up to me. Right? I don't blame nobody if I lose money. So, what do you guys think? All right? Do you guys like it? What's your thoughts?